let's finish things out here with 3 Stock Lunch, trading some of the big movers of the day, like Amazon, which is lower after news of those 9K extra job cuts. Also was named a top e-commerce pick by Morgan Stanley. AMD is higher after Raymond James upped its price target to 115 from 100, and Raymond James also upgraded Enphase to outperform, first such rating for that in a decade, saying it's, quote, trying to, quote, catch a proverbial falling knife. It's up 4% today, but down 27% on the year. But let's turn to Ava Ottos. She's chief investment strategist at ER Shares. She's going to trade these all with us. Ava, welcome. Let's start with Amazon. Down mover on these job cuts. What do you do with the stock?
It's a buy. I think this is an overreaction. To us, it's not bad news that they have additional job cuts. We need to recognize that no other company in the U.S. has created as many jobs as Amazon. They went from 56,000 jobs to 1.6 million in 10 years. And in the last 5 years, they increased jobs by 5 times. And in fact, in some of these years, they had more jobs than the rest of the S&P 500 combined. So it's not bad news to us. We also need to realize that this is a company that has the second highest revenues globally, only after Walmart. They have 515 billion in revenues, strong revenues. And in this market where we have a banking crisis and people are looking for a safe haven, I think it's not a bad stock to own. Also, given the fact that the stock right now is hovering near its 3-year lows.
All right, Ava, let's move on to AMD. What do you think of that one?
AMD is a hold, largely because the stock appreciated 50% in the year to date. I love the sector actually, but I'm concerned regardless the recent appreciation and the fact that they have among the weakest margins in their category. So they have an EBIT margin of 5% compared to the rest of the category of 30%. That's a big differential. And I'm also concerned given the strong appreciation year to date and how much that can continue going forward. So I wouldn't encourage to add to this position, maybe hold, or even if you have made a good return on this investment, take some profits off the table.
All right, then Enphase, which I think is a buy for you, Ava. This is a name that people always say is, perfectly positioned to benefit from the energy transition, but the stock struggles. It's high beta, whatever you want to call it. Why would you pick it up here?
So I agree with the analyst report today that it's attractively priced, and the stock has dropped 40% in the last 4 months. That corresponded with a decrease in oil prices. But I think we haven't factored in the fact that the European market, Europe, is going to continue to buy solar energy regardless of the low oil prices. So if you factor that in, and the fact that they have among the strongest fundamentals in their category, with a revenue growth of 68%, EBIT margin of 21.6%, compared to minus 2.1 for the rest of the category, and the fact that given that regardless of the strong revenue growth, they're able to double their margins, their fundamentals look great, and I think I'm still bullish on solar regardless of the low oil prices.
All right, Ava, you want to offer a parting word about the market? Is this just the calm before the storm renews, or what?
I think we're all looking at the next Fed meeting. So I think we'll probably see 25 basis point rate hike this time. And so that's largely factored in the valuations right now. So I think, things are not looking that bad regardless of the banking crisis.